Welcome back. We've got a very special guest with us to talk about one of the sectors that has finally made a comeback in 2021. We used to say banks ka time kab aayega. Well, it looks like it has arrived, and we've started to see the pickup in valuations also for private sector banks as well as public sector banks. Speaking of public sector banks, look at SBI. It gave you a phenomenal return in 2021, almost 60%. Joining us is a veteran banker and a former chairman of the country's largest bank, SBI. Yes, our guest is Mr. Rajnish Kumar, who's live with us today on the market. Good morning, Mr. Kumar. This is Nentara. This is the first time that we are speaking in the new year, so a very happy new year.
Thank you.
Yes, seasonal greetings to you too, sir. I had the honor of doing your first... Yes, sir. So I want to begin my question by asking you one thing. Do you believe that this is finally that golden era of banking that we've all been waiting for? It is finally here. The NPA mess is behind us. Credit offtake has picked up. Loan growth has picked up.
No, definitely, there are two things. One is that the performance of the banking sector is always linked to the economy of the country and vice versa. So it's very important for the banking sector, a solid banking and financial sector for economies. And the other way, when the economy starts doing well, then the banking sector always does well. And as you have rightly mentioned, that last, I will say, 6 to 7 years, the banks were bogged down with the non-performing loans, and with consistent effort, they have been able to put it behind. And even in COVID scenario, the trend which is emerging that yes, there is a stress in MSME sector, and to some extent in the retail sector. But the agriculture and corporate sector have largely remained unimpacted. And that is where we are seeing that the performance of the corporate sector and the banking sector in this period has been quite good. And if we are talking about the golden era, it's very difficult to make predictions like that. But yes, lot is happening in the banking sector in the country and globally. And adoption of technology by the banks in their almost every aspect of working, that is bringing a major change the way banking services are delivered to the consumers in the country.
You know, Mr. Rajnish Kumar, when you were also the chairman, you took a bet, right? And you did it with YONO, recognizing fintechs will be there, recognizing the need for new open banks. Even if you were to look at recent data, SBI YONO is now featuring in 2 out of the 5 most downloaded and used apps for last year. But this entire race between banks and fintechs, is that finally behind us? Is it, has the markets figured it out that both will survive and thrive?
No, one is that obviously legacy banks or institutions, they will not sit quiet. They are making necessary changes. And as you mentioned, YONO from a State Bank of India, it is a very fine example that what a legacy bank can do. And the legacy banks and institutions, they enjoy the trust of the customer, and their customer base is very big. A bank like the State Bank of India, their customer base is huge. And coupled with the product, which is a world-class product, so you have a winning combination. For fintechs, they are very innovative and agile. That is the advantage which they have over the legacy institutions, and they can adopt the change very fast. In legacy institutions, it takes a lot of time if you want to make any change. So they have both their plus and minus, but getting the scale, getting a profitable business model, So it is not so easy, and it is a challenge, and that is what we are seeing on the fintech front. But I think the spirit of innovation which fintechs and the startups have brought up in the country, it is very good for the country's economy. It is very good for the consumers in the country and the citizens of the country. So many public services are being now delivered using the technology. So everybody gains in the process. One, the productivity of the economy goes up, and second is the consumer convenience. More competition means more benefit to the consumer. So I believe that there is a place for everyone, and everyone has to change. For one, it is a fight of capturing the consumer mind and the space. And for the other, it is to do the catching up and come up to the mark and deliver the services in the fashion in which a modern consumer today wants.
Morning, Mr. Kumar. Nikunj Dalmia also joining in. Mr. Kumar, somewhere do you think fintech with the whole concept of buy now, pay later, unsecured loans at higher rates, they are taking risk, and they are taking risk because they are getting valued by P investor on the size of the book, not on size of the liability franchise. Isn't that dangerous?
No, one is that there is always a risk reward matrix. So even if you take higher risk, whether you are pricing it correctly or not, that is also very material. So in unsecured loans, obviously the default ratios are higher, but so are the net interest margin. So risk has always to be seen in the context of the reward. And as far as buy now, pay later is concerned, so that is something which is catching up in the country. In Western world like South America or Europe, so that has always been the culture, buy now, pay later. And as I said again, that the convenience because of now the new technology which the fintechs are bringing in. So they are creating platforms which are very convenient from a consumer's point of view. And as far as risk is concerned, as I said, that if they are not lending cheap, all these loans don't come cheap, and they don't come cheap because there is a higher risk. So till such time risk-adjusted return on capital is taken care of, then the unsecured loans or buy now, pay later, they work on this principle that you pay higher rate of interest because the default ratio is high.
Okay, I'm just going to flip it around from fintech, which are new tech, retail dominated disruptors, to where the economy is headed. And let's look at what corporates are doing. Every corporate is saying that we see demand, our capacity utilization is between 75 to 80%, we are spending. So do you think, while we may talk about disruption in fintech, but the real business cycle advantage will come to corporate banks, and this time large corporate banks, because the demand for loan will be large. In the previous cycle, the inflation was different, the levels were different. Now for corporates to grow, they need more money. That's because economies also become large. So do you think this time around corporate banks are in a very, very sweet spot, the large 3-4 ones?
Yes, because one, they're doing fairly well on the retail, because all banks consciously have taken efforts to build up their retail business. And corporate credit demand was very subdued. We had historically low interest rates, and still the investment cycle didn't pick up because there was excess capacity. And besides, the corporates have been consciously deleveraging. The corporate earnings have been good. So there is a cash sitting in the balance sheet of the corporates. Plus, because the demand is there, then if the corporate credit picks up, then obviously the corporate banks, large banks, they will benefit because their credit deposit ratios, they are quite low at the moment. If I remember correctly, for State Bank of India, this ratio is as low as 61%. So obviously, if the credit deposit ratio improves, then it will have an impact on the profit on the positive side. So I think for the banking sector scenario as a whole, whatever has happened in the last couple of years, this is the time to reap the benefits for at least those banks who have used this period to put their house in order, both in terms of strengthening the balance sheet and as well as bringing about the necessary changes in their processes and consumer outreach by using the technology.
I don't know if it's fair to ask you then, Mr. Kumar, just on the basis of the parameter that you just mentioned, who do you think will win the race?
No, like the second round, obviously, State Bank of India definitely is doing well. It is reflected in its stock performance. So amongst the public sector bank, I think State Bank of India, other than State Bank of India, one or two banks also may benefit, not all of them. And private sector, in any case, they have certain advantages. And so overall, I would say, I will not single out any bank, but the scene for the banking industry seems to be quite optimistic because we are at the cusp of the beginning of a new investment cycle, supported by many policies of the government like performance-linked incentives for the manufacturing sector, the desire of the global supply chains to diversify and not necessarily dependent only on one country. So there are many things which are going right for India. And as things seems today, the impact of COVID in the third wave seems to be much less chaotic and much less disastrous than what it was second wave. But in these things, it is very, very difficult to make any predictions for sure. But if the way things are going on, I think we are in a period where we can see good economic growth and consequent benefit to the banking sector. It will be beneficiary and it will be contributing to that.
You've spoken like a true SBI luminous, straight from the heart, haven't you? But, just playing devil's advocate, Mr. Kumar here, what do you think would be the biggest risks to this fast developing ecosystem, if I can ask you that?
The risk is always like, say, infrastructure financing has been very risky in this country because of the lack of consistency of the policy and as well as resigning the contracts. So that problem has not disappeared. The banks, if we are looking at the investment opportunities on the corporate side also, apart from capacity expansion or new capacity coming in, but the infrastructure is still, there are uncertainties and that risk would remain. And I'm sure that all the banks, they have learned their lessons. They lost a lot of money on financing the infrastructure, not only banks. You take example of EPC companies. I think more than 40, 50 EPC companies have disappeared. Then you take any company which was active in infrastructure financing. They are in big trouble. So the policy environment around infra financing, where the policies are more consistent and the contracts are longer. So that would be required. So I think a lot of work requires to be done in that space. But otherwise, in other sectors, I don't see a problem. But we can invest trillions of dollars in this country. In infrastructure, in waste management, in renewable. So the sky is the limit for investment. Let me put it this way.
Mr. Kumar, always such a pleasure having you on the show and, getting insights from you, especially on the way the banking ecosystem is going to evolve in the days to come.
Thank you very much.